Or find out more about how to use a reverse mortgage in your retirement, or find out how to make money with reverse mortgage, you can always go to the Silver Hair Tsunami event on May 12th in Harbor Island. Now, next up, we have Jonathan Jerotz. He's the Vice President of Retail Sales at Synergy One Lending. Now, he's got a very important topic to talk about. A lot of people are looking to leverage their assets in retirement and create a larger income. JJ, welcome to the show. Thanks for being part of it.
Yeah, thanks for having me. I appreciate it.
You're welcome. You know, this is a very significant topic now that everybody's trying to find the money to have the quality of life they want in retirement. And you know what? The topic today is about leveraging your mortgage.
Yeah. So you know what I found. I mean, we're pretty fortunate here in Southern California. I mean, a lot of people that own homes have seen their equity positions increase dramatically over the last 5 years, let's call it. Since 2011, I mean, the housing crash, we got through that. And now people are seeing, some people have seen right back to their levels, their high levels, if not surpassing their high levels of equity since 2006 if you've been in their house for a long time. So, how do you leverage one of your biggest assets, right? So that's the conversation that I have with people all the time. So, for some people, it's just pulling, the mentality of paying off your asset, paying off that house and having it free and clear certainly bodes well for some people. And they kind of think about that, and they feel comfort in that they own their home free and clear. However, you have to have a different mindset. I mean, people need more money to live. And so you have to kind of think about it in a couple different ways. Can you leverage your asset, pull some cash out, and then what do you do with that cash? So what's the benefit of it? You get the cash, you help your tax consequence, which I know you talk to people about all the time. As you go into retirement, how are we going to alleviate some tax consequence? Well, mortgage interest is one way to do that. The other thing is creating more income down the road. So that's the biggie. So can you buy some other real estate? Can you leverage your current asset and obtain more real estate without maybe even pulling any cash out of your current savings? And I think that's really the conversation that I have with people more so than anything else, because people want to buy more real estate, but they have their piggy bank, so to speak, and you don't want to tap into that. You don't want to pull the plug out of the bottom and have the money kind of falling through the cracks there. So can you leverage your current asset, pull some money out, and use that for a down payment, and then leverage and put a mortgage on the rental property? So, really quick, I mean, rental rates have increased dramatically too.
Oh, yes.
And, not just the real estate values, but the rental rates, and they're posed to go higher even in the next 5 years.
Oh yeah, you know what? There's not a lot of houses being built here. We just had Alan Nevin on a few weeks back, and he had talked about we're seeing real estate increase by 5 to 7%. We're seeing rents increase just because people can't afford to buy, so they can afford to rent, and the rents are coming up. Yeah. And everybody wants to be here in our sunny city of San Diego.
Yeah.
So
yeah, definitely. So I mean, I'll give you a real life example here. I mean, it's always nice to just bring it home. Give me some numbers, right? People want to see. So, it's kind of scary sometimes when you look at what you can buy homes for, and then you think, wow, I'm going to spend, in this case, $625,000 to buy a rental property. But to get the high rent, sometimes you need to do that. You can certainly do it on a condo, or even, I mean, gosh, somebody's buying a condo in La Costa, right around La Costa Resort, for $240,000. It's a pretty good deal. He's going to be cash flowing that. But in this circumstance, it was a $625,000 purchase price. So they had a free and clear home. They pulled $300,000 out of their home, and that put a mortgage on their home of $1,427. And then they put a mortgage of $335,000 on the rental property. Now, the benefit of putting such a large down payment is you're maximizing the interest rate. So when you put that big down payment, you're not getting like this investment property sort of higher interest rate penalties for buying it as a rental. So when you figure, and this is no cash out of pocket out of their piggy bank whatsoever. So they're pulling the money out, and it covers closing costs and everything. So when you look at the overall payment of both of those mortgages, property taxes, homeowners insurance, you're talking about less than $3,700. Sounds like a big number, but rents, and this was a good deal on rent, they probably could have got more, $4,200.
Oh, wow.
So their net income from this just using their asset as leverage is $516 a month.
That's great.
It's pretty good. It's pretty good.
You know, that's a wonderful strategy, because I have a financial planning client that had a mortgage that was only $100,000. That was $100,000 left on it, but he's paying $3,000 a month for that mortgage because he got it in high interest rate times.
Yep.
And he wanted to get more out of it. So what we did is he actually got a $400,000 mortgage, and I think it was like $1,800 or $1,900, which is the total payment. But he took $300,000 and put it down on $1 million medical office building.
Yes.
And right now, after he pays all the mortgages, he's still netting $36,000 a year. And he thought that was the, you know what, when we went through the numbers, he realized, gosh, this makes a lot of sense. And you know what, you're right, he didn't have to take any money out of his pocket. And when he was financing the medical office building, it was really easy to qualify for that because they looked at cash flows. And they were like, oh my God, this is great. But what he didn't realize, and he didn't think about, was the fact that the rents keep increasing. And everybody has a 10-year lease agreement, which means their rent keeps going up every single year for 10 years, and they're paying his equity down.
Right.
So basically that $300,000 in 10 years will be about $500,000 if the building doesn't grow at all. No, $600,000 if the building doesn't grow at all. And his income will be closer to about $50,000 net. So it's wonderful. It's a great strategy. I'm glad you're sharing with our viewers.
Yeah, well, you know, and it's just, I mean, we get kind of stuck in the box a little bit sometimes thinking, you know, okay, I live in the house, it's a home, which you know, homes are great to have, but how do you leverage? You got to leverage everything that you have for the future and try to get as much as, you know, income-wise, tax consequence-wise, and protect yourself.
Well, he actually, at the beginning, he thought it was a big risk, but when he looked at the whole thing and completed it, he realized it wasn't that big a risk to do.
Yeah, definitely.
Thank you so much for being with us, Jay.
My pleasure.
If you would like to get more information, you want to go to the Silver Hair Tsunami workshop on May 12th. You can go to the Silver Hair Tsunami website. You can get that information. JJ's going to be there. He's going to be talking about the things you can do with a mortgage that you can lever it, how to save your money, how to make sure your money doesn't fall through the cracks. You've got to get JJ. Bruce was on earlier. You want to be there. Up next is Wayne Dunlap.